Morning everybody, welcome to Stockradar Stocks in the Move for another week. Today's date is the 26th of January 2023. My name is Richard Lee and I manage the stockradar.com.au website for you. Okay, we're having a fairly good week the last week or so. Lots of stocks starting to move off well. We're going to have a good look at them today. Firstly, what I want to do is go straight to look at the top 10. Firstly, we've got BHP, the big Australian at the top, which is fantastic. Brickworks doing really well. Insurance Australia recovered quite nicely this last week or so. Mineral Resources just keeps pumping out the gains. Northern Star is one of the gold stocks we do hold at the moment, which is benefiting from that gold price increase. Super Retail Group, which has just gone from strength to strength, really surprising us all in that retail sector. Seven Group's also making some gains, and then we've got Tabcorp, T&E and TWE also doing pretty well at the moment. And you can see Seven Group Holdings chart there, which has been heading fairly north for quite some time now. Okay, now we've also got a stock picks open position review. We've got stock picks are up 31% annualised at the moment, which is good. We've got top returns like Mineral Resources up 31%, Champion Iron up 26%, Chalice up 22%, Sandfire's up 26%, and T&E's up 22%. So they're all looking pretty good there. So don't forget to check out Trading Centre for an update on all the stocks we cover at the moment. There's plenty moving there at the moment. This week in Trading Tactics, I'm going to be having a little look at trend and momentum waves, because we're starting to get in the mood of the market at the moment. So we just want to take advantage of some of these opportunities, and I'm going to talk a little bit about how we can do that today in trading Trading Tactics, I should say, sorry. Okay, so first let's go to the overseas markets and have a look at the Dow Jones to start with. It's run into a bit of a war up there, a little bit of a standoff at the moment. It still looks fine there. We've got a high low in here. The volume's been middling here. The momentum is positive and it's above the average. So things are still positive there. We've just got this resistance up here, which is going to attract some sellers, but we're looking fairly confident at the moment. But we'll have to just wait for a little bit more evidence to see what happens there. The S&P is also starting to turn around quite nicely. We've got a little bit of that bubble pattern there happening there. You can see how it's now starting to move above the trend line, the moving average, and we've got this resistance level up here, which is really the trigger for a turn there. And we've got a higher low here, and we can see the big volume here, which has been pretty impressive there for the S&P. So we're quite sort of happy with this at the moment. It's looking fairly constructive for us now. Okay, so now I want to go to the Nasdaq. The Nasdaq is sort of kind of carve out a bottom. It's the same situation. It's now moving up and starting to test this resistance level here, the downtrend line, the moving average, the horizontal resistance there. It's all happening there. We found some good support here finally, and we've got a bit of green bars coming through finally, which is probably good. And this is recovering. Still nothing bullish signs yet, but it's a slow turn. It's part of the process there, so it's looking pretty good. Remembering we have come down 36% from the highs there on the Nasdaq. Okay, now gold, it just keeps pumping out the gains. It's going pretty well. It's moving towards the R1 level, just above 2,000. Just maybe it might get there. We've got some good green bars occurring here, so there's some buying. We're sort of still solidifying at the moment because it's been fairly iffy and butty for a while. But we've also got the momentum index, which has turned quite positive here. So it's been a fairly good ride. We have some gold stocks in there, so we are benefiting from the move. But it's not an across the board buying spree at the moment. So probably market might wait a little bit to see what happens up around this 2,000 level to see if we can really get a move on and continue this big rally that we had from a couple of years ago after this big long consolidation phase. We'll have to wait to see what happens there. Copper, Dr. Copper is again, it's had a bit of a slow week this week, but it is making some good gains here. We're seeing a good turnaround here into good volume there, so we're fairly encouraged by the copper price, as is Mr. BHP and things like and stocks, Sandfire stocks related to the copper price. Brent crude is finally starting to show some signs of support. We're getting a bit of volume come through here. So the downtrend is certainly firmly in place, but we're now starting to, as they show these signs of support, which is a good sign. We have come off, $40 from the highs there, which maybe is a point of return, and we've got some good long-term support here at S1. So Brent crude may be starting a little bit of a turn there. Okay, the ASX 200 Of course, this is our favourite market. This is what we really want to know about. Again, remembering this is an index of roughly 20 stocks that dominate it. I'm a stock-specific person, so a lot of my stocks will not be generally going the same direction as the ASX 200. However, having said that, we are moving higher, much better performance than the Dow. It's all that mining flow we've got. A lot of good mining stocks are moving along really well. So this is keeping a good move on this one. So as I said, the clouds are clearing here a little bit. Can it break through? We haven't got there yet, but we're looking encouraged by the volume has been okay, and also we're seeing the momentum index turn positive down here. So that's a good sign. If we just go and have a quick look at the stock pick update, where the stock picks and ETFs are up 4 to 44 of 183 covered, so 43 stock picks of 162, so that's up 4 again this week, and we still got the one ETF of 21 at the moment, so that's what that is. The portfolio update, the conservative portfolio is up to 5 out of 20, so it's 25% at the moment, roughly reflecting what we've got on the stock pick count. But of course, our energizer, which we leverage to the stock uptrends, is fully invested at 5 out of 5 and 10 out of 10. So that's where they're going at the moment. So that's what's happening with the overseas markets and the ASX 200. Now we're going to have a little look at some stocks. Okay, plenty of stocks to look at today. Last week we looked at a couple of leaders, we looked at some downtrodden stocks, property, miners and some retail stocks. This week I want to focus on the consumer staple stocks. An interesting situation, showing some signs of support. Not exactly taking off at the moment, but I want to look at a couple of stocks there, and also some new encouraging trends that are starting to develop across the market. So let's have a look at that. So let's first start off with Domino's Pizzas, which we've had a look at for a while. This is in the consumer staples sector again. Now, we know what this stock has done. We've been watching it for a while. It came down 68%. We've been observing the correction here. It has had a pretty good rally so far. We haven't been involved in it because we haven't got a trend reversal pattern, but things are changing. You know, we just wait for conservative, for things to change and develop in the right way. This will have a correction at some stage, and that's what we're really going to look for at the moment for this upward move. So we are back through the moving average. There's been some encouraging volume. Momentum hasn't quite kicked in yet, but you know, it's the whole pattern is looking pretty good, and it's moved a long way along the reversal pattern, and is now in a neutral state, which is a very good sign on the trend intensity basis. So Domino's, we're still watching this one and observing this one for the moment. Coles, an interesting situation again. It's been rotating in this trading range for quite some time. Got down here super fund accumulator. I'm going to talk a little bit about that in the newsletter this week, about a couple of different strategies that I have. You know, I have my own super fund, and I also have a Stockradar portfolio as well. So they're two different things with two different objectives, but we can talk a little bit about that because we are seeing some opportunities at the moment for additions to the super fund if you have one. So for the moment, we've got Coles here. It's now starting to rally through here off this low here, which is a good sign. I'll be actually waiting on a Stockradar basis for this to break to give me this signal, because we're stuck in this trading range. Trend intensity rating is still -5, but we have just moved through the average. Volume here, let me just close this up a little bit so you can see. Volume here was still a little bit indifferent. We have some big selling here and this big move down here, but we're starting to get a little bit of buying maybe coming here. Momentum index is getting better, but it's still below the 0 level. So very, very early days, and trend intensity rating is still in downtrending zone at -5 at the moment. So a long way to go to get a trigger there on a longer term basis. We're at a major support level, which is an interesting area to add to your super fund. Okay, so that's Coles. Now the next one I want to go to is Metcash, which always provides interesting reading. I think, you know, it sits in between these two stocks of Coles and Myers, but it's been resilient and has performed pretty well. So we quite sort of like the performance of what's happening here. So if I just look here, trend intensity rating is -5 at the moment. So still not encouraged, but we came off this big uptrend here. We corrected back. We've come back to some big support back here, and we've held this 3 times now. So this is quite an interesting situation we've got happening here. This is the resistance up here at around about 430 for something like this, and this is down around the $374 area. So this is the trading range we're in at the moment, but it's been very resilient. Showed these 3 signs of support here. We've got to get through here. There is some resistance above here, but I think if we can get through here, it's a very good sign for Metcash as it sits there. So the volume is still a little bit indifferent. Momentum is turning flat to neutral. It's above the average. So again, things is turning there. The downtrend doesn't seem to be developing in this one here. So we're starting to get a good consolidation here, and it may well break up. But that's the current challenge at R1 there. That's what we're looking at for Metcash. Okay, the other one I want to look at is Bapcor. Now we did enter this one a while ago. It's been a frustrating ride, that's for sure, but this happens, and we're going to look at a couple of other stocks later on that we've had to wear some fairly difficult times through, but we had a little break up here earlier on. This is back in November, and ever since then we've been a frustrating period of just not collapsing, but just general weakness and malaise more than anything. So we're still watching this one carefully. We still hold it. The trend intensity rating is +6 at the moment. It's still above our stop. It may get money managed out. I don't know yet, but we have to wait for those signals to happen. I don't anticipate these things at the moment. Now, we had a big selling wave last week. It's still held reasonably well, which is a good sign. MACD is flat and it's right just on the average at the moment. So trend intensity rating is just holding at 6 at the moment. So we're just waiting to see what happens here. If we get taken out, we get taken out, and that's what happens with Bapcor. So we'll just have to watch that one and see how that continues on. The next one I want to look at in that sector again is ArbCorp. I don't know if there might be quite a few fans of this stock, I think, out there, but it has come down 52%, which is a long way from its high. So this is a big opportunity, this one. It's come down fairly quickly. It's now come back to some long-term support. It's bounced 3 times off that support, which is a really good sign. And now it's starting to get this little downtrend line, and the moving average is starting to be violated. We've had a good week so far this week. So we really need confirmation up around here for me to look at this as a buy. But it's certainly a start. There's still not a lot of volume happening here. This is still recovering. So again, trend intensity rating is still -7. So it's got a lot of work to do, but it is down a long way, and it is representing a potential opportunity once we get that trigger. So an interesting stock in that consumer staples sector again. Okay, so there's a few that I wanted to have a look at, some encouraging signs, but we're not quite there yet as far as confidence goes in that sector, but watch for the opportunities there. Now, I mentioned 2 other stocks before which have had a frustrating ride since we first got into them, but patience has been rewarded because we always, we just sometimes have to just sit through some difficult times, and that's what stocks do sometimes. However, we've got a break up here from IAG a while ago. Had some good volume. The momentum index triggered a buy as well, so the rating was probably about a 10 when it broke up. It's had it since then and rallied quite well, then it had a correction back, and so it's been frustrating for a couple of months here, but now finally we've come back to this old high, with this old high resistance has now provided support, and the market's bounced off there quite nicely, and we're now starting to get some volume, and the momentum index stays positive. So Insurance Australia is starting to look pretty good again. Again, stocks that turn like this, you can see it's a slow turn. The control from sellers is starting to come back into the buyers, and it just takes time to develop sometimes for the market to get confidence before it explodes upwards. So that stock, again, has been a bit of a difficult ride, but we've weathered the storm, and it looks like we're now starting to benefit. It's above our entry point, which is good. So we're now starting to raise our stop on that one. The other one is frustrating, which is ResMed. I look at all the broker reports, go yes, buy. And of course the stock has struggled for quite some time. So we've got some good resistance support back here, which is now held above. If we just focus a little bit more on this, we can see now here was the break up here, this is back in October last year, so it's been a long wait on this one. It's come back down, it did hold above its stop loss, it hasn't broken it, it certainly tested it down here, but then we've had a big jump here on some good volume. So the selling wasn't that heavy down here. Initially it was, but it didn't really follow through. And then the buyers came back in and have ramped this stock up pretty quickly. So it's held above the stop. Trend intensity rating is still +5, which isn't outrageous, but it's still strong enough. So we are still holding this stock as that's what we have to do, because that's what the trade plan says. So we're still holding in the OK for the moment, and hopefully this will be true to all those broker reports and start rallying nicely, which is what we need to see. Okay, so that's ResMed for you, and we're hanging on to that one for the moment, and it's looking a little bit better. Okay, now a couple of other stocks. Washington sold Patterson, which has been an interesting situation. It's been a slow recovery. It's with the Milner camp, with that and Brickworks, which we'll have a look at in a second. But I quite like what's happened here. It's come down here. Let me just close up this volume here, because there is some quite good buying occurring in here at the moment. So if we just squeeze this up a little bit, you can see on these rallies here, the buys are coming back in here, and the momentum index is better. It's now above the average. So I'm really just waiting for this trigger point here at 28.84 to break to give me a signal to buy this one. Trend intensity rating is +1, so it's sitting at neutral and looking not too bad, looking interesting. It's like a lot of these stocks are almost there, not quite there, and some are looking pretty good. It's not having a great week this week so far, but certainly worth watching what's happening here at the moment. So the pressure is building, and I like this higher low at the moment. And if we had to have a quick look at Brickworks, which will be in here somewhere, if I just go like this, yeah, Brickworks. This one again, it's you can see what's actually happened here. It's had a break up over here a while ago. It's broken up here around about October last year. Came back a little bit. We toughed it out, held above this low point here, and it's now rallied strongly and looking towards R1 as the next challenge. So where Soul Patterson goes, Brickworks usually goes. There's a fairly close relationship between the two. Volume's still light, a bit of holiday stuff. Momentum's okay, and the moving average is also looking good. So this is, you can see this is starting to turn up nicely and push towards the R1 level at the moment. Trend intensity rating is +10, so all signals are green and go for this one. Okay, now let's get into a couple of stocks that have been swinging higher. Well, I'm going to go show you Super Retail Group again because it really it's had a really good recovery, and it really did surprise the market, that result. And when we get moves like this sort of strength where each week it finishes on its highs, you know, the support is there, and also we get little gaps in trading here, which means there's real buyer strength and prepared to pay much higher prices than they did last week, which is a real vote of confidence. So we had a little trend reversal here. It's rallied up through here on some great volume. We see some good starting volume here. It followed through nicely. There's power in the momentum index, and R1 is the next level. Trend intensity rating is +10 for Super Retail Group. So it's really on track to challenge that R1 level up around $14. So go Super Retail Group. Okay, the next one we want to look at is South 32. It's been a recent entry for us, but it's done quite nicely since we entered it. We've seen it built here quite a bit. The buying built here quite a bit in before we got the signal. We always wait for these things to happen, to develop, so the evidence is nicely in our corner and the odds are in our favour. So it broke the downtrend here, came back at a 50% correction of the big last move. For those who remember it, who are involved in it, had a great run up here during 2021. And we got stopped out when it finished, so we locked in the profit there. It's come back, corrected 50% of that move, and has now done a little trend reversal pattern and broken higher again, and it's now heading back towards R2 and some reasonable volume. We can see a big red bar there. Well, what do we know about the red bars there? When that happens, if it doesn't affect the price, that means the buying has absorbed all that selling, so that's a good sign. There's no sign of any price weakness there, which is good, and the momentum index is showing good signs of strength. So trend intensity rating is +8 for South 32. It's on a trend wave. It's gathering momentum like a lot of these new entries are at the moment. Okay. BlueScope's another one, which we've got a nice little trend reversal here, based out here quite well. We've got a really nice volume pattern here, pushing hard at it before it broke up. It then did break, and a little test of selling, which went away pretty quickly, and the buyers jumped on this one again pretty quickly, and are now pushing this stock higher. It came down 41% from its high. So again, when these stocks come back a long way, they're pretty good opportunities, and the momentum index is getting better. Trend intensity rating is +9. So it's another good stock for you at the moment. We had a fairly lengthy time of waiting for this stock to turn, but now we're starting to see the buyers, and you can just see this green bar starting to push this price higher, which is a really nice thing to see, what we always do like to see. Other stocks, Goodman Group, it's also at a slow turn. It's come back to some support. It just gained trend intensity rating this week of +5. It's been a new entry. It's come down 40% from its highs. We're starting to see the buying come back in, and the momentum is easy, but it hasn't triggered it yet. But we're above the average, and volume's okay. We've had a trend reversal, so we're just starting to get this thing moving along nicely. It's starting to chip away at this downtrend slowly, as you can see here, as it gets through the downtrend line and the moving average, and starts to find higher support here from this low, which is a really good sign. And then we get a higher low and a higher high, which shows our trend reversal pattern. So Goodman Group is looking pretty good. Maybe the other property stocks are going to follow. I don't know. But for At the moment, Goodman Group looks okay. And then finally, we've got Mineral Resources, which is one of my little favourites. Again, it's just really observing these simple patterns. When stocks form these patterns and we get a break, we buy them. We don't know what's going to happen, so we work with the stop to make sure we protect ourselves. But this has gone from 65 to 95 pretty quickly, so a nice big gain there. A new high confirmed, momentum swing higher, and it's been very good. We've seen some nice volume, nice green bars, very strong momentum index. To keep the momentum index this high on the scale means good strength of the price move. Trend intensity rating is plus 10 for Mineral Resources, and it's been a great little buy for us. Okay, so that's the stocks I went through for you today. There's quite a lot there. Consumer staples are the almost stocks. Some are looking okay. Some have moved off. Some of those consumer discretionary stocks are looking better as well, like Super Retail Group, and some of our mines, which we've got some good profits in some of those mines already, which have been doing pretty well, like Mineral Resources. So that is most of the stocks I want to go through. Now I'm going to go through trading tactics for you and tell you a little bit about how I do this sort of thing and how we do catch these waves and get these momentum moves. And really it is a very simple process. It's all about focus and discipline. And a lot of these stocks here, BHP, South 32, all the ones I covered today, Champion On I haven't, Qantas I haven't, A2 Milk, they're all gone really well. So that's what we want to catch onto, and the market is moving at the moment. So that's what we want to do. So 5 tips for you to start off with for today to do this. Okay, firstly I'm going to say be bold, be brave, and be you. Make sure you follow your own trade plan, because that's how we always succeed. Don't listen to anybody else or anything else. So first is don't let fear stop you. Fear is an opportunity, okay? So put it aside and look at what you can see there. And you can see those stocks that I'm showing you today that are all looking quite nice. And we can just see the evidence there. There's buying there. There's all this factual evidence that we're looking at and we're basing our moves on. So be very focused on what you're doing. Be very focused on your trade plan and your signals as to what you've built and designed yourself, because that's the profile and the strategy that suits you and works for you. Okay, listen to the market. Listen to what it's saying. When there's price action and when prices are going higher and there's volume, there's buying, and that's a very basic rule. And you can see what I showed you today. A lot of those stocks, there's been some very nice big green bars showing lots of good buying there. Okay, so listen to the market, not anyone else. Okay. Follow your signals. When you get the signals, follow them. Don't doubt them. You've built it for a reason. Make sure you follow your signals and make sure you keep your blinkers on. Be focused. All that sort of stuff, which I keep telling you all the time. Don't listen to anyone else. Do what you think is right, because that's how you will succeed. Okay, so then what do? Firstly, you catch the wave. We want to catch the break, catch the move when it's going to start to explode higher. So you've built your evidence. You set your trigger point, and then you take your signal. That's the first part of the whole process. And that's when you're just starting to catch that wave, when it's just starting to break and starting to move. So then you've got to ride that wave as long as you can. Some are short, some are long. When you ride your wave, you set your stop. If the price gets moving higher, you lift your stop. Every week you review and monitor your trade to make sure your stop's in the right place, you're protected, and also you're protecting your profits, and also to making sure you're limiting any losses. At the moment we've got profits to protect, and that's where we're at for the moment. So then the tide will turn. At some stage the tide will turn. So when it does, the market's come off from its highs there. When your stop is violated, you take your exit and you lock in your profit. And don't think, well, hang on another week, whatever it might be. When the tide goes out, you do it, you lock in your profit, and that's how you can succeed, because you've got to lock in those profits when they're there. It's really, really important to do that. Okay, so when the tide goes out, take your exit. Okay, when the tide's out, you're out. Okay, because that's really important. And then you can move on to the next trade. There's plenty of stocks out there. Remember, we only trade small portfolios, 5 stock, maybe 10 stock. So there's a lot of other stocks out there, and we've got 44 stock picks at the moment, so there's plenty of opportunities. A lot of them we haven't taken because we haven't got room for them, but the ones we have got, we focus on. So when the tide's out, you're out. It really is a very simple process that I just showed you. Those 3 sessions there: catch the wave, ride the wave, and then the tide turns, you get out, and that's the way it goes. Okay, that's a simple process. So make sure you catch those waves. Make sure you focus and discipline on what you do. Okay, so what's happening at Stockradar? For an update on all our stocks, covered stocks, and in previous videos, go to the Stockradar Trading Centre. That's where the heart of Stockradar is, where you find all the information, the entries, exits, alerts, stops, trend intensity ratings, all updated every week for you for Sunday night, ready for you for the market on Monday morning. So there's everything you need to monitor your trading, even a special watch list to set up your own portfolio of stocks. In Radar's rant in the newsletter, which is out this week, many of those sold off stocks as great opportunities to add to your super fund. I'm going to have a look at a whole lot of those. I've got a nice little table of 20 stocks there of downtrodden stocks. Some are down 50%, some are down 40%, but they're great opportunities. Whenever the market does this, it's always an interesting time to add to your super fund. So there's probably in that table that are just right for you. So have a look at the Radar newsletter, which is coming out this week. Okay, so firstly, just to say, to finish off here, just to recap a little bit, you don't need many stocks to generate profits, okay? You don't need to cover everything, so don't worry about the FOMO or anything like that. Just focus on a few stocks and you'll be okay. Small portfolios are easy to manage and lower cost. Important. We're always trying to chip away at those costs. There's always out there somebody trying to take some from you. Simplicity works best. Keep things really focused and really simple, especially your trade plan itself, okay? And keep your focus and be disciplined. Keep your focus and be disciplined. I can't say it more enough, more times. It's really, really important for you to do that. Okay, so look, I hope you all have a great Australia Day today. I'm going out for lunch today and enjoy myself. Stay safe. This week, watch your trends, heed your stops, give me a call if you need any help. I'm happy to have a chat with you, and I'll see you all again next week for more insights from the markets. Okay, thanks very much.